by not planning in advance, your Social Security could become part of your taxable income. We don't want that. And by the way, if you go past $34,000 of income while taking Social Security, then up to 85% of your benefit is taxable. Hi friends, Colin Richards here, and I'm excited to be back with you in this segment of the Lord and Richards Show. And as we're talking about taxes and how to get them out of your life and disinherit Uncle Sam, one of the key things we've been talking about is moving our money from taxable, or what I call forever taxed, to never taxed money. That's a phrase I use often because as much as you can do that during your working years, and if you're listening or viewing this on YouTube or listening to our podcast or the radio, I want you to make plans to sit down and talk to us about how to implement a tax reduction plan in your life. And this is critical as part of our overall financial independence in retirement. We call it retirement freedom. And to be bogged down by taxes often does the opposite. It makes us feel shackled. When we talk about the buckets of taxable income versus tax-free income especially, I want you to gradually move that money from forever taxed to never again taxed. And I'm sharing with you, I started in the previous segment, a little strategy here that's important to think about now. If you're on Social Security in your retirement years, and let's say you've got the maximum benefit as an individual, which is $4,018, or a couple, $8,036, you're making close to $100,000 a year. That's a little over $96,000. So if you earned up to $25,000 over and above that Social Security, whether you earned it from a job or you took it out of your IRA or 401k or 403b, all of that Social Security will not be taxed. It will not be taxed. However, if you earn more than $25,000 on top of your Social Security, you could start paying up to taxes on up to 50% of that benefit. So suddenly, $48,000 of your Social Security benefit has now become taxable. Do you think that's going to have an impact on you? Absolutely. Today, tax rates in 2025 are 10, 12, 22, 24, 32, 35, 37. I don't expect you to memorize that. But let's say you're a single taxpayer and you're in the 10% bracket. That means the first dollar to $11,925 is taxed at 10%. Well, you can see that as the tax rates go up, you're taxed on more and more of your income. And by not planning in advance, your Social Security could become part of your taxable income. We don't want that. And by the way, if you go past $34,000 of income while taking Social Security, then up to 85% of your benefit is taxable. Wow. So folks, we want to be very, very, very careful about how we withdraw money during our retirement. And again, one of the first strategies I want you to think of is how can I start moving my money from forever taxed to never again taxed? Because, for example, if you suddenly have more taxable income in retirement, your Medicare premiums are going to start going up as well. So just add that to your additional taxes. So how do we start building a tax-free retirement? And by the way, most of this work is done before you retire, but not all. If you're a retiree now, there are strategies that we can implement. But I will tell you, if you're pre-retired, we have more strategies at our disposal. Let me ask you a question. Are tax rates today high? I just listed out the brackets, right? 10, 12, 22, 24, and so forth. Highest bracket topped out at 37%. Well, if you answered yes, tax rates are high right now, actually history would say otherwise. During the Ronald Reagan post-war movie-making era, right? That's how we know him then, not as the president. Ronald would only make a couple of movies a year and stop. You say, well, why would he do that? Is that so he could take a long vacation? Perhaps, But one of the other reasons was he could only earn a couple $100,000 without moving into, brace for this, you might want to sit down, the 90% tax bracket. You say, oh, wow, that's no way. Did they tax 90% of your income? Absolutely they did. Now, someone might say, well, that was on the super rich. I'm not worried about that. I'm just a normal person. Well, here's the deal. We have what's called a progressive tax system. That means taxes progress up the line and get higher. But here's the problem. When your highest bracket is 90, guess what? The brackets leading up to that are also going to be higher than if your top bracket was lower. And so everybody was getting creamed with taxes in the post-war era. Right now, we actually have a window of opportunity before the tax provisions that gave us lower taxes in the Tax Cuts and Jobs Act run out. At the end of this year, end of 2025, we move back into old brackets and higher rates. So you have a window of opportunity right now. You must take advantage of that. Please don't let inertia stop you from moving money from forever tax to never again taxed while taxes are on sale. My wife would literally cross town, spend $10 of gas to save $5. I'm kidding. She's not that bad. But how many of us are bargain hunters? How many of us are bargain shoppers? Think of it another way. Your taxes, your tax deferred counts are building up balances that will one day be taxed when you turn 70 or before when you start withdrawing. 73 is our new required minimum distribution age. When you have to take money out, the government says, give it. So once you hit 73, you're forced to, or whenever you choose to start withdrawing before that. Here's the deal. I want you to be in control of your destiny. I want you to decide when you pay taxes and how much they're going to be based on the current rates, and decide for yourself. Some of you may have a mortgage and you put a little extra amount in each month. You know what you're doing? You're deciding for yourself when to pay the taxes, even though they're not all due, right? Your mortgage interest can be paid out over 30 years, but for your personal financial reasons, you may be deciding, I want to pay that earlier because it's in my best interest. Well, you have that same opportunity with your taxes. The problem is that we're taught by our accountants, unfortunately, to always kick the can down the road. Well, here's the deal. If taxes are on sale now, and there's a possibility that you could pay a lower rate today and pay taxes on the seed versus higher taxes later on the harvest, what do you think makes the most sense? So we want to help you take advantage of the current low rates to move money from forever taxed to never again taxed. And we have powerful tools in place, software, that will help you build out your tax plan to mitigate, minimize, reduce taxes both now and in the future. Let's have a conversation about this, along with how to develop a plan for you to retire worry-free, based on the three freedoms: freedom of time. Oh, isn't that wonderful? Freedom of wealth, having the money to do what you want, and freedom of health, how we can help support your health goals. We have so much to talk about. It simply starts with a phone call.